Today, Crypto World is at Consensus 2023 to find out how crypto's biggest fans feel about the industry after 2022's meltdown. And Circle CEO Jeremy Allaire sits down with us to break down the stablecoin issuer's latest announcement, which hopes to expand interoperability. Welcome to CNBC's Crypto World. I'm Jordan Smith. Digital currencies giving back some of yesterday's huge gains, with Bitcoin dropping to $29,000, Ether trading right around $1,900, and Solana trading around $22. All right, let's jump right to the latest from Consensus. The annual event is in full swing, and it's bringing together industry leaders in crypto, Web3, blockchain, and the metaverse. Crypto World's Talia Kaplan is there to give us an inside look into what's different this year compared to last year, now that we're deep in the so-called crypto winter.
You can see there are a lot of people here at Consensus 2023 interested in learning about the latest developments in crypto and what's in store for the future of blockchain and Web3. Now, last year, this conference brought in about 20,000 people, and this year, organizers say that number dropped to anywhere between 13 and 15,000 amid this downturn.
Obviously, this has been, I would say, the most turbulent year in crypto's history. So we had a lot of plans kind of going into the planning season this year. We had to revise those plans several times just as the industry changed and news developed and all of that stuff, but we ended up in a pretty fantastic place.
It's been about a year and a half since Bitcoin peaked at more than $68,000. And since then, the crypto industry took a beating as it was hit with macro challenges and scandals, including the collapse of FTX. Crypto lenders BlockFi and Celsius, as well as digital asset brokerage Voyager, also filed for bankruptcy last year. Now, the drama started just a few weeks before Consensus 2022 kicked off last June. That's when the Terra USD stablecoin collapsed, wiping more than $80 billion from the total crypto market cap. And yet, there was a massive turnout at last year's crypto conference.
We're constantly focused on what are our consumers doing, what are our artists doing, and then how do we evolve and augment those experiences with new technologies.
Despite everything that has transpired since then, major companies from different industries have a presence at this year's conference, with executives from Warner Music Group, MasterCard, Google, and LVMH speaking at Consensus 2023, sharing their vision as it relates to Web3 and blockchain technology.
Is the budget smaller this year compared to last year?
A little bit, yeah, but we are able to lean into that and kind of do some more compelling things. Last year, we had our stages all over the conference center, all over Austin. We've really kind of gathered a lot of our stages on the show floor. We have 9 stages on the show floor here, which is really unique. And it really just adds an incredible vibrancy to the show floor to have the content and the exhibitors and the lounges and the entertainment kind of all in one place.
Were you at Consensus last year? And if so, how does this year compare to last year?
I was. Last year it was like more bull market, so I feel like it was like everybody was really excited. This year is more chill, but I feel like there's like a lot more quality than quantity here.
What are you noticing is different this year compared to last year?
I just think that there's less people here than last year, but I think that it's still a pretty good show, pretty good turnout for so far.
Last year you had a lot of trucks driving around promising 20,000% return on this token and some flashy sports car, and this year there's a lot more people that look into what can this technology really do and how can it really change everybody's life.
Last year Consensus was in June, so it was just 1 month after the Terra Luna collapse. So we still didn't really know what the effects of that ecosystem collapsing going to have on the rest of the crypto ecosystem. And since then, BlockFi, Celsius, FTX, so we had a lot of these failures. A lot of people have been scared to come into the crypto space.
PitchBook's Robert Lay is here on the ground working on an analyst note focusing on sentiment and key themes in the crypto space.
I just want to see what are the builders still building? Over the last 2 years, and you felt this last year at Consensus too, there was a lot of novelty and a lot of hype. And novelty and hype are not business models. And so this year, that novelty and that hype is not around anymore. And now it's what developers are building that has real-world practical use cases, and that can be monetized, that can be built into products and businesses.
Now, this conference wraps up tomorrow with speakers from the IRS, Citadel, and Marvel Studios, just to name a few. We're also expecting some big announcements from companies like Robinhood, MasterCard, and more. You'll hear from some of those companies right here on Crypto World.
All right, for our main story, Crypto World's Mackenzie Sagalos sat down with Jeremy Allaire, the CEO of Circle, to talk about the stablecoin issuer's latest announcement at Consensus and to hear his take on the bank collapse that threatened USDC's reserves back in March.
Circle made a big announcement this morning. It's a bit technical, but my understanding is that it will make it easier to use USDC, expand interoperability.
Yeah.
Walk us through what it means.
Yeah, I mean, at a basic level, what's happening right now is we're seeing all these different blockchain platforms emerge, and we hear about them all the time, layer ones, layer twos, etc. And the way that I think the average person should think about that is like these are like new operating systems that people build apps on. And so there's applications being built on one platform, there's applications being built on another platform, whether they're consumer apps or financial applications, and all of those apps need digital dollars. But right now, if someone, say, has USDC in an Ethereum wallet and they want to, transfer that into an app that's, say, a game built on Solana or an NFT marketplace built on, Near or whatever these different platforms are, right now to have that interoperability is basically costly, time-consuming, and risky. We've heard about bridges being hacked, hundreds of millions of dollars being lost. These bridges are oftentimes basically locking an USDC and then wrapping it and making a wrapped version available on another blockchain, and that basically puts money at risk. So what the cross-chain transfer protocol does is it creates a way for developers who are building apps for all these different ecosystems to be able to move USDC for their users seamlessly and safely without any of those risks. And so the bottom line is what this will allow, it will allow the development of end user applications on blockchains that are frankly safer and easier to use. So that's really what the technology enables. We have a huge amount of enthusiasm in the ecosystem about it right now, like tons of companies excited to build on it. And again, we think about USDC as like the best protocol for dollars on the internet, and this is like an evolution of that just deals with this proliferation and how and where all these apps are being built.
And this comes at a time where the industry is struggling with shallow liquidity. Back in March when we had the SVB collapse, you also saw the Silvergate exchange network and Signature, Signet, 24/7 payment networks go with them.
Yeah.
Does this mean that USDC is going to play a bigger role in terms of 24/7 payment settlement?
Well, it's an interesting thing, as we've always joked, USDC is always on, dollars. USDC doesn't take bank holidays. And I think people who use USDC intuitively understand that. They're like, as other people who use digital assets, it's like, yeah, this is how money should work. It's always on the internet. I can directly transact it with anyone else. And so it is a superior, medium of exchange in that way. And I do believe that more and more that organizations that are working in this industry will manage essentially their treasuries instead of with commercial banks. They'll manage that in USDC and they'll manage it on a blockchain, and they'll use these more advanced security wallets to kind of do that, and we're seeing that. But I think it is a key issue though, because ultimately we do need 24/7, 365 liquidity between the existing banking system and USDC and the broader digital asset world. And so that is something that we do provide, and we've brought that online post the signature and send issues. And we're going to continue to add more options for that all around the world.
What can we look out for next?
Well, the concept that we have is that we want to make sure that if there's someone in the world, whether it's a person or a household or a business or another financial institution that wants to use USDC, that they should be able to go from their local bank and their local currency 24/7, 365 directly in and out of USDC. And to provide that kind of global liquidity and to then enable all that, the sort of open internet settlement behind that, that's our goal. And so, we are focused on building partnerships and building direct operations in many, many international markets. And we're seeing an incredible amount of activity. Everything from major countries in Africa, to Latin America, to Southeast Asia, to major countries as well, where basically people are building those on and off ramps that then become available and connected into the USDC kind of liquidity and network.
And I definitely want to talk more about the use case for USDC and some of these international markets you just mentioned. But in terms of the Silicon Valley Bank situation, obviously there was this 48-hour window where USDC lost its dollar peg. Some people were concerned. It was fine and back by Sunday evening, Monday morning, when the Fed announced it would be stepping back in. Do you have anything to say about that situation?
Yeah, sure. I mean, a couple things. So the first is people have to differentiate between in the primary market, which is Circle and Coinbase, which is where are the two kind of primary markets where people will mint and redeem USDC, and the secondary market, which is people who trade it somewhere else. The overwhelming majority of the actual liquidity on USDC is in the primary market, and in that we've never lost the peg. We have always redeemed for $1, and we've always issued for $1 for the entire history of USDC, including over that time. What happened that weekend, though, as we all know, is because of the banking crisis in the U.S. and because of different banks that were basically shut down, the ability to actually transact and redeem was on traditional bank hours, meaning it was closed on the weekend. And that really caused a lot of concern because of also the concern about what was going to happen to the reserve assets and the like. And so the secondary market, people were trading it for less than $1 for about a day, and then it repegged as people understood that this was not an actual underlying issue for USDC. I think the other thing, though, on this is that for us, we have long been advocating for a full reserve digital currency model. And we've long believed that the right pathway is to have the Federal Reserve provide a license and supervise digital dollar issuers that are running on blockchain infrastructure. That is what we do today and what we want to do in the future. And the reason is we don't believe that a dollar on the internet should be subject to the risk, the fractional reserve lending risk of banks. And so what we've seen is again and again, banks fail, and the payment system itself and the base layer of money itself should not be subject to that risk. And so that's what we want to see, and I think a regulatory outcome is now there's real discussion about passing a bill to supervise this kind of digital dollar and to actually give it that level of safety so that it is not subject to that commercial bank risk.
All right, that's all for Crypto World today, but we'll be back again tomorrow with lots more from Consensus 2023, so we'll see you then.